Salute, folks. It's your boy, the insurance junkie, your fiduciary fella, the all-star advisor Alonzo Hall, and I've returned to Weapon Tap on Your Head with another ADH Wealth Solution article. Today, we're taking a look at an article published Friday, December 29th, 2023 by Liz Newman from CNBC Select. Before I go in, ladies and gentlemen, make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share. Lastly, to contribute to channel growth or to schedule an appointment with a licensed financial professional, the links are in the description of this video. 3 times a 401k loan makes sense, and what to know before you take one out. Borrowing from your 401k loan borrowing from your 401k should be a last resort, but it can be a lifesaver in a crisis. Tapping into your 401k before retirement can decrease what you'll have available in your golden years, and it usually comes with a penalty. But there are some situations where borrowing from your 401k plan is your best option. In 2023, the number of Americans who took out a 401k loan went up by 14%, according to an annual report from Retirement Fund Administrator Empower. The company cited increased credit card debt, higher interest rates, and the resumption of student loan payments as leading factors for the increase. The same report found that 27% of respondents were very or somewhat likely to take out a loan or hardship withdrawal from their retirement plan in the next 6 months. Below, find out how a 401k loan works, when it's the right call, and how to minimize the impact on your nest egg. Now, before I continue, ladies and gentlemen, realize that there are other ways that you can save up for retirement that are likely to equal or outpace a 401k, like life insurance. However, you have to work with a financial professional who understands things like the tax code, which is something called IRC, or Internal Revenue Code. For example, you may want to ask your agent, what is IRC 7702? Just to find out. But as we continue, what is a 401k loan? A 401k loan allows you to borrow from your workplace retirement fund. It doesn't require a credit check, and you're not hit with the taxes and penalties you'd face with a hardship withdrawal. While you do pay interest on the money you borrow, that interest is funneled back into your retirement account. There is a limit on how much you can borrow. Usually $50,000 or 50% of your vested account balance, whichever is smaller, over 12 months. In most cases, you must make payments at least quarterly and repay the entire loan within 5 years. And if you leave your employer, the money is due in full. A 401k loan should be your last resort, according to Rob Williams, Managing Director of Financial Planning and Wealth Management at Charles Schwab. I agree, a 401k loan should be your last resort. I would likely tap into a loan from my life insurance prior to a 401k loan, my personal opinion. It's an emergency resource, so make sure there are no other viable options, Williams said. It's not the best borrow against the 401k for something opportunistic like a vacation. Even in an emergency, you should consider a personal loan before a 401k loan. CNBC Select recommends Lightstream personal loans as the best overall Discover Panel personal loans as the best for next day funding. When a 401k loan makes sense. There are situations where borrowing from your 401k is the best or only choice. If you think you fall into one of these categories, your first step should be to talk to your employer to see if they offer 401k loans. Each employer has different rules, different provisions, different interest rates, and limits, Williams says. You have no other viable options. A 401k loan may make sense if you've explored all other avenues or if the alternative is high-interest credit card debt. All else being equal, a credit card is going to be a lot more expensive, Williams said, and there's less forced discipline involved in paying it back. Interest on a 401k loan is typically the prime rate plus a point or two, significantly lower than those offered by traditional credit cards. Hold on, ladies and gentlemen. So you should understand what the prime rate is. The prime rate is an interest rate that changes nationally every Wednesday by 12 noon. Ask your CFP or your accountant or your insurance agent about the prime rate and when it changes. And please go to Google and type in what is the prime rate. Information about 401k loans isn't reported to the credit bureau, so unlike credit card debt, it won't affect your debt to income ratio, and late payments won't hurt your credit score. You have medical expenses. Medical emergencies can derail even the most budget-conscious person. About 1 in 5 adults with medical debt owe $5,000 or more, according to the Urban Institute. Borrowing from your 401k could be a valid solution if you have medical expenses that your health insurance doesn't cover. If you have access to a health savings account through your job, however, use those funds first. You need a down payment on a home. You don't always need to make a 20% down payment to buy a home, but if you want to avoid paying private mortgage insurance, it's still going to be a significant sum. A 401k loan could help you get the funds to land your dream home. While most 401k loans must be repaid within 5 years, you can usually negotiate a much longer term if you use one to buy a house, according to Williams. Up to 30 years, depending on your plan. Pros and cons of a 401k loan. Before applying for a 401k loan, consider these benefits and drawbacks. Pros of a 401k loan. No credit checker application. It can be much easier and faster to get approved for a 401k loan. Payments are automated. Most employers will set up automatic payroll deductions. You pay interest to yourself. 401k loans have much lower interest rates than personal loans and credit cards, and any interest you do generate goes back into your plan. And an aside, ladies and gentlemen, that sounds really a lot like something called the infinite banking concept with life insurance. Cons of a 401k loan. The money isn't growing. The funds you've borrowed aren't being invested and don't have the chance to benefit from compound interest. Another aside, ladies and gentlemen, you don't have that negative when you borrow from your life insurance. Your loan is tied to your job. If you leave, whether it's your choice or not, you'll need to repay that loan quickly. Another aside, ladies and gentlemen, you don't even have to pay back the loan from your life insurance. It can be deducted from your death benefit, though it's best to pay your loan back because you're only paying yourself back. You may not be able to keep contributing. Depending on your plan, you might not be able to make contributions to your 401k while you're repaying the loan. Bottom line, a 401k loan should only be considered as a last resort. If you have to borrow from your retirement account, continue to make contributions if you can, and be sure to pay it back in full. That's going to be it for today, ladies and gentlemen. Make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share, share, share. Lastly, to contribute to channel growth or to schedule an appointment with a licensed financial professional, the links are in the description of this video. With that being said, ladies and gentlemen, wipe ass, work in progress every day and see success. And remember, folks, when people challenge you, they don't challenge you to challenge you, but they challenge you to challenge you. Accept the challenge. Salute.